Okay, today is going to be an interesting one. We are going to take a deep dive into the new homes pre-construction rental market, and we have none other than Ben Myers. Ben is second time on the podcast and a friend of Fox Marin. For those of you who don't know Ben, Ben is the president and owner of Bullpen Research and Consulting with over probably 20, 25 years plus in the industry. Ben is the go-to for developers looking to do anything or have a sense of the pulse of the market in Toronto. So, Ben, so great to have you here. It's been a while, but love to get your feedback on what you're seeing happening in the market.
Awesome. Well, thanks for having me on again, Ralph. I guess I didn't do too poorly the first time around, so I got invited back.
Exactly. That's a good sign of a good conversation when you get an invite back. But so good to have you here. Okay, so let's just talk about it, Ben. At a high level, how would you describe or talk about? There's many facets to it, but how would you describe or talk about what you're seeing across the board in the Toronto real estate market? And then we can get into a little bit more details after that.
Yeah, I mean, I obviously mostly deal with the new home market, but obviously I follow the resale market closely because I essentially have to value new condominiums at or only slightly above where the resale market is. So I'm taking a look at on that on a regular basis, and I mean, you've seen the numbers, 28% decrease in February year over year in terms of transactions. Pricing is only down about 1%, supply up 5%. But, just looking at, and before we started this chat, obviously most of my dealings is in, the high density market and the condo market. And pricing's only down on an average basis about, 12, maybe 14% since the market peak. So pretty shocking. I mean, supply is up 370%. So we've had, consecutive years of record levels of completions in the GTA. 2025 is set for another, near record year for completions in the high rise space. And at least in the first half of 2026, there's going to be a decent amount of completions. Obviously, for those of you that pay attention to the new condo market, it really started to trend down when rates started to go up. So we're talking the second quarter of 2022. Completions in the new condo market is really on kind of a 4-year lag. So sales started to go down in Q2 of 2022. So we'll start to see completions start to hit in the second quarter of 2026. And once supply starts to go down, if we at least maintain a certain level of demand, we'll start to see pricing and rents start to trend back up. So that's a very, very far out from now, but I would say that the current market, the best word for it is just uncertainty, right? And I'm sure we'll get into it, but lots of different factors changing every single day in our marketplace.
Absolutely. So every month, whenever I look at the numbers put out by the Toronto Regional Real Estate Board, I'm always shocked when I look at the condo numbers. Now, that is the weakest part of the market on the resale side. But also, it's the new home sales on the condo size had been just devastated. So it seems to be bad news all around all the time for the condo market when you look at the amount of supply that keeps coming online and sitting, when you look at the anemic sales. So you have all this supply coming on, you have very low transactions, you have low sales, you have all these completions coming online as well. And you take that into consideration, and then you look at the actual sale prices, and you're seeing a different story. And it's really surprising every month. I'm like, oh, 720,000. And, you're expecting a lot worse, especially if you're taking in some of the information that you're seeing in the media, which is just incredibly negative. So what do you attribute to condo prices holding on from an analyst perspective? Like, how do you make sense of that story where you see prices sort of holding firm, doing really well relative from where prices were at the peak, but you're seeing all these negative headwinds trying to pull the price down, and this negative story that just won't go away? Why are prices relatively holding and performing relatively well, all things being considered?
Yeah, it's interesting. Well, obviously, when you see supply go up, either in terms of completions, but also supply in terms of listings, it should put a lot of downward pressure on rents and downward pressure on pricing. But there just still seems to be a lot of latent demand. And then we talked about the immigration story. In Canada, up until very recently, we were taking in over 1 million people a year. And sorry,
Yeah.
maybe I'm messing up immigration with net population growth. But the net
Yes.
population
Yeah.
growth was at one point last year 1.2 million, when the long term average, and the long term I mean like 50-year average was 360,000. So a lot of people coming in. We were getting 250,000 into Ontario, and we started getting 500, 600,000. The typical number for the GTA was 75 to 100,000. And I think at one point we even got well over 200,000, growth in a single year. So there's a lot of demand out there, and some of it is what I call latent demand. It's not just someone moving here and needing a place to live, but someone like me, that's got 3 kids. Okay, we have one household, but then when those kids all become 18 or 20 years old, then they go out and they create 3 new households. So the population didn't increase, but now we've increased the demand for households by 3. And I think that's happening with a lot of adults living with their parents. They've been saving up. We have adults in their 30s, in their 40s, living with roommates and deciding, hey, I'm gonna go out there and hit the market. So demand is always very difficult to get a hold of. Maybe some people that would have moved out are now saying, well, okay, well, I can now buy, or I can now rent a brand new unit for this price, and that's kind of in my zone. So maybe I'll stay, right? So it's always difficult to assess demand when there's so much going in and out of the GTA. In terms of new pricing, one of the reasons maybe pricing is staying higher is a lot of a significant portion of the transactions are coming from new product. So the new product is high quality, so it's grabbing a high price in the marketplace. So that's potentially a factor in there as well. But it really is confounding, right? Given that some of the negative news, but the market still seems to be holding up pretty well. I think there's certainly a number of investors that bought the value of their property is lower than what they paid for. So maybe they're willing to hold it off. They're willing to just have it as an active listing for 6 months, for 9 months, for maybe 12 months. They'll wait. They'll keep it vacant and hope that we'll get more rate cuts and demand will be stimulated in the future. So it is always difficult, right? When you try to think, okay, so many investors say, I just want to get this thing sold. I don't want the money to burn a hole in my pocket. But others are saying, well, if I'm going to lose 40,000 on this thing, maybe wait. And then in the future, it'll be worth 60,000 more. So there's always a balancing act. And certainly, I don't have the risk tolerance to keep a unit vacant for 6 to 9 months, hoping that the market will return. But others are betting on that the market will return. So I'm not sure that's the smartest bet in the short term. I still think 2025 is going to be pretty flat. Others are maybe a little bit more bullish than I am.
I think it's really interesting that, if you went to end of 2021 and you said basically we're going to see close to 500 basis point increase in interest rates, what will happen to the market? And you would presume that you would have seen not just a lot of inventory coming online, which we've seen, but we would have seen as well prices dramatically go down, not the small sort of correction we've seen thus far. And it's like this whole interesting confluence of events. Number one, people are willing to hold on to their properties unless they get the price that they want, be it vacant or, and I think this is a huge component of market units that are on the market on the condo side, is they're like, okay, it's tenanted. I'm down $800 a month. If I can get the price that I want, great. If not, I'll keep the tenant in there and I'll wait till things realign.
Yeah.
And also you're seeing a bit of a shift where the smaller typical investor size units are sitting on the market for sale, but you have the larger, more end user, meaning people who are going to live in it. those ones vacant seem to be selling the best right now in the market, maybe pulling up that average price a little bit as well. But it is just fascinating to see the Armageddon of high interest rates at a very rapid rate hit the market, and yet prices holding despite an incredible amount of inventory. People
to jump in right there on that
yeah.
one point is a lot of that new supply coming on is that small investor product, right? And so you expect if you're turning over 500 square feet and 450 square feet and 300 square feet units, that would pull the market down. Plus, a lot of these units don't have parking, right? So the new unit that's trading a lot is a much smaller unit without parking. So, I know I just said that maybe new condo prices are pulling things up, but maybe the composition is so much smaller that maybe it should be pulling things down. So again, I just wanted that just jumped into my head, the whole size and parking thing. So it is very confusing. Sorry, I cut you off. You can finish your point there.
No problem. I think it's a very valid point. The only other thing that's interesting and we'll get into maybe the larger conversation of when we see an overall turnaround. Right now, we're talking specifically about the condo market. That is the segment of the market, Toronto real estate market, that is hurting the most. So probably best to focus on there. And obviously, that's where your expertise lies. We are starting to see, anecdotally speaking anyway, something we haven't seen for a while on our team is we are starting to see first-time condo buyers in that like $500,000-$600,000 range starting to come out looking to buy. And that's something we did not see for all of last year, essentially. But we have more than a handful of buyers now looking at this price point, looking for downtown condos, either both for investment or to live in. And so it is a sense early that people might be starting to smell out the beginning of the bottom and wanting to sort of get in maybe on a variable and ride it down. I don't think we're there yet, but I do think that people are like, if it's impossible to time the bottom, but if I'm in close to and or around, I would be happy. And I think we're having more and more of those conversations that did not happen basically all of 2024. When do you see, and of course, it's an impossible question to answer, but everyone's always trying to make sense of what they can't make sense of right now, the enigma being the Toronto real estate market. But when would you, if you were to see a turnaround or starting to see a turnaround, when do you think that could possibly happen based on the data that you have in front of you and in conversations you're having with developers?
On the resale side, the resale tends to lead the new home market.
Yes.
Investors start to react to what's happening in the resale and the rental market. I do expect the market to be, again, the resale market and rental market to be fairly flat over the next couple of years, maybe even into early 2027. I think at that point in time, we'll have eaten through the majority of the new condo inventory, meaning the projects that have come to completion that had unsold supply. Investors will put units online right at completion, and I think we'll have eaten through a lot of that, and then we'll start to almost get in an undersupply situation, and that will start to drive prices back up and rents back up. So it may not be till 2027 that we see a full return to the marketplace. I think we're just going to kind of tread water, in the next couple of years in terms of where pricing is at. So if you're I certainly advise anyone that's looking at the market. I don't think we're going to see big movements one way or the other over the next 2 years. So if you find something that you really like and you can afford the payments, jump in now, right? As opposed to, okay, let's try to get it in the fall of 2025 because that will be the absolute lowest point of the marketplace. I don't think that's the right approach if I was advising someone, but I'm not a real estate agent.
Lucky you.
Yeah.
Lucky you, Ben. And it's interesting because we had I don't know if you know the Talk Condo guys, but we had them on.
I actually had Roy on my podcast as well, which is going to come out soon. The Toronto Under Construction podcast.
Amazing. Well, we can put a link to that in the show notes after. So I'll remind.
That one hasn't come out yet, but I know that he was on your show. So he's making the rounds.
They're the best. And so in our conversation, one of the things we're talking about is the way by I think 2028, maybe they put out a great graph that basically showed the pipeline just dwindling down. And by 2028, 2029, we could be looking at like 3 or 4,000 new condos coming to market, just anemic relative to, population of the GTA of over 7 million people. And the thing is that with new construction, it's like, as you were saying, 4, 5, 6 year cycle. So it's not something that you can just easily turn back on. When we go down to no completions coming online, that will be the case for a number of years before the taps get turned on, and maybe even longer in consideration with having to have the resale market turn around first. And then, we'll start to see the pre-construction market ignite, because their costs are very, very fixed and can't react to normal market forces.
Yeah. Yeah. So we had something similar to this happen, almost a decade ago. I mean, the new condo market really turned in 2012, and it was pretty soft the second half of that year. And 2013 was one of the worst years for new condo sales at that point in time. Obviously, totally eclipsed by 2024. But there was about 12,000, 11,000 sales that year.
Mhm.
And then we fast forward from 2013 to 2017. Well, there's this major lack of supply that hit the market in terms of completions. And we started to see huge rent growth and huge price growth in that marketplace. And if you remember 2017, we had the Liberals put in the Fair Housing Plan. We had the foreign buyer ban. We had rent control brought back. So there was a bunch of factors that got brought in because of that. And that was really because of a 4-year lag. So now think of 2013 with 11,000, 12,000 sales, and now 2024 with 5,000 sales. What that will ultimately do to the market in 2029. But 2023 sales were pretty soft as well, and the final 9 months of 2022 were all right, not great, but all right, certainly below average. I think we probably need, and this is just my anecdotal number, 25 to 30,000 apartment completions, regardless of tenure, condo and rental, to satisfy demand in our marketplace. Maybe more now that the sizes have shrunk so dramatically in the marketplace. So if we end up with 5,000 completions or 3,000 completions in 2029, that is just an absolutely enormous number, and it will only have result in bubble-like growth in that market. So that's kind of where I see things happening. Maybe we don't get 2017 growth, right? That was kind of crazy, but it even held 2017 strong, 2018 and in 2019 in the resale market was pretty good, right? So despite the Fair Housing Plan kind of diminishing things in right after it came on, right? So a lot of different factors, and you don't know how the government's going to react. I think I've said on my podcast many times, most of my business now is rental studies. So condo developers coming to me and trying to figure out what that market looks like, and rental developers looking at the landscape and saying, okay, yeah, maybe rents are a little bit flat now, but if I get in the ground today and I come into completion in 2028 and 2029, I'm going to have this fertile market of tenants looking for product, and I'll be the only new one on the block ready to help them out. So certainly getting a lot of interest in getting in the ground today to hit that kind of dearth in the market in terms of supply.
I do want to talk about the purpose-built rental market in a moment, so we'll put a pin on that. But I do want to circle back on what you said earlier, because if you take it into context, it's extremely relevant in trying to understand what we're looking at in the next 5 years for the Toronto real estate market. So, you talked about 2012, where we saw sales go down to 12,000, and we had that really bad year or two. But if you think about it and you think about the difference in the population size of Toronto and how much it's grown, I don't have the stats in front of me, but it will be quite specific,
Yeah.
quite significant from 2012 to 2025. And then you think not 12,000 sales, but 4,000 sales. And this is probably not going to be one awful year. This is on the new home sales. It's probably going to take a few years before that ignites. So we could be looking at 2025 at around that level and 2026 at around that level, and maybe even at 2027 at around that level. So
Yeah.
we're talking about an elevated or significant period where we're going to have really, 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 really low supply until the resale market catches up to a point where it makes sense to buy pre-construction at $1,600 a square foot, knowing that today, on average, we're probably hovering closer to 1,000. And so if you start to extrapolate not just 2028, 2029 at 3,000 completions, but then 2030, 2031, 2032, and it starts to paint a picture in terms of where prices could go with no real supply coming online.
Yeah. It could be
and you don't hear enough people talking about it because
it could
everybody's
be a
just worried.
5-year stretch, like you said. Yeah, because I don't anticipate strong pre-construction sales in 25, 26, or even, the first half of 2027. So we could end up with a 5-year stretch of undersupplying the market by half of what we need, right? So it could be some pretty crazy years there in terms of consecutive growth, and politicians asking why developers are charging so much and why they aren't building anything and why is there not affordability. And so, yeah, lots of blame to go around for what's happened now, but it's really a lagged impact of COVID. It finally hit us, right? With the product inflation, with the massive increases in government fees, with obviously the trades were just overloaded and they increased their ask and their profit, and all that kind of just led to I've been calling it a toxic soup of things that happened. And obviously investors are to blame as well. They looked at it and said, okay, well, that one was 1,300. Now this one's 1,400. I just made 100,000. I guess I should buy it 1,500. I guess I should buy it 1,600. I guess I should buy it 1,700. So it got a little bit out of control. And I think the one thing that will ultimately even hurt the market, even in 5-7 years, is some of these investors will end up losing a lot of money in this period and will be very gun shy about jumping back into the pre-construction market, even if they see prices going up 7, 8, 9, 10% a year. They say, okay, well, I read that book before, right? Let's cool the horses. So I just don't think we're going to see the 75, 85 story, 800 unit buildings anymore. I think, investors will be more cautious. Developers will be more cautious. Lenders will be more cautious. Equity providers will be more cautious. So I think we are going to run into a very different market than what we're used to. The golden age of pre-construction condo sales and construction may be over, and we may enter into a new age where we're more like New York, where we're more like Boston, where we're delivering a lot fewer projects on an annual basis, and they're more high end. Maybe there's a smaller portion of small units, but they're servicing more of the higher end of the marketplace as opposed to just investors looking to rent out. So yeah, it could be a very different market moving forward. And certainly I'm trying to, in my mind, envision all the changes that are coming. And it's a lot of different factors coming together.
Yeah, for sure. Talk to me, and this is something that's always really mysterious to a lot of people in the industry who aren't specifically dealing with it, let alone what the media reports on, but it is a real good leading indicator as to where the market is going. And I'm talking about land transactions, which really is the bulk work of where the market is at, because it's what dirt is trading for. And it's not something people talk about, and it's certainly not something you see in the media. Like, can you just sort of go through at a very high level what you're seeing in terms of land transactions from peak to where we're at now, and what kind of impact do you think that will have on the future of our market.
Yeah, I mean, understanding the high density land market is the most difficult thing you could possibly do in real
Yeah.
estate. When I started my land report, I was definitely a little naive in terms of my ability to try to analyze it. There's just so many factors that are not publicly available, right? In
Yeah.
terms of the structures of the deals, in terms of the density bonuses, in terms of demolition clauses, in terms of cleanup costs. So there's just so many of these things that are really not, publicly available in terms of what's in the contract. So that makes it difficult to assess. And again, I'm assessing it at closing. Whereas it's not like the typical resale house where it could be, 2, 3 months closing between when the agreement comes. In
Yeah.
some of these instances, the agreement is 2, 3 years out, right?
Right.
So something you might be seeing closing today and say, oh, well, someone paid $125 per buildable foot. That seems a little bit high. Well, actually, the handshake agreement happened, in 2022 when the market was a lot stronger. So that's why they're paying this certain price. Just the fast forward to now, there's not a lot of those transactions happening. I think there still are developers who have capital that believe in the market in the future. They know that's going to take them 2, 3 years to get these projects entitled, and they believe the market will be back at that point in time.
Yeah.
But the expectations of the vendors are still high, of the people selling the land. They
Mhm.
look and say, like, why would I trade at the bottom of the marketplace, right?
Yeah.
A lot of these vendors have owned the land for 20 years, 25 years, 50 years. It's been in their family. Their grandfather, bought these 8 storefronts together and had his business in one and rented
Yeah.
out the other.
Yeah.
And he paid, $5,000 for each of those, and they're now worth 10 million each. All right. There's no sense of urgency to move those properties. And once the values start to get to a certain point, then a certain low point, then ultimately it makes better sense as a retail. It just makes sense for them to keep it as retail and wait. And that's essentially what's happening. There are developers that want to buy and believe in the future of the market, but the residual value of that land is at a point where it makes more sense for the vendor to continue to hold it as opposed to sell it right now. So there's not a lot of transactions happening, and the ones that are, the agreements happened years ago, or there was already an assembly started, right? So the developer put together 3 or 4 pieces during the peak, and now I need to round this thing out, and maybe pay higher than I want to, but I know that the sum is better than
Mhm.
the individual pieces. So once I get that assembly together, I should be able to sell it at a higher price. So that's essentially what's happening right now. The one thing that is interesting, and I'm not sure how nitty gritty that you want to get into, I expected there to be more distress.
Yeah.
When the market is strong, we tend to get people that get into the development industry that don't have a strong track record of building. Anyone could buy properties.
Yeah.
Anyone could hire, a consultant like me and an architect and a planner and go through and start the entitlement process, get all the consultants' reports together. But it's a whole different thing to sell it and get it in the ground. Actually, at the peak of the market, really anyone could have sold these things as well, right? You didn't even need a sales office. You just needed some black line drawings to get some of these things sold. But so there was a lot of people that got into the industry and bought land. So what I expected with the huge rate increases, with the changing timeline, that we'd start to see a lot of those properties, fail and come onto the market. But it seems like there's a lot of extend and pretend going on, and lenders taking back these properties, and even
Yeah.
some of the lenders I'm dealing with deciding we're just going to build this thing out ourselves. you
Really
know yeah, so not what I
interesting.
expected to hear, but there's a few lenders going out and hiring their own general contractors and going to build some of these projects on spec. And most of these are townhome. They're not a 50-story condo
It's still
project,
really
right?
interesting, though.
They're infill type developments.
Yeah.
So yeah, kind of interesting happenings in the marketplace, and trying to essentially lenders trying to preserve value in the marketplace, and hoping that things come back. Certainly, it's going to be longer than most people anticipated this downturn. We just had, going back just in my 20, 25-year career, just how quickly the market bounced back from the global financial crisis in 2008 and early 2009. By the second quarter of 2009, we had record resales for condos, and then we have this, like I said, 2013 was a bad year, but 2014 was a good year. 2015 was back. 2016, we're seeing double digit price growth in the marketplace again. So things have just come back so quickly that anyone that's not above the age of 60 doesn't understand what a really long downturn looks like. It will be interesting to see how some of these young people in the industry, there's developers that are 15, 20 years younger than me that have their own development companies, right? So see how they ultimately decide to move forward on their projects.
It's amazing what happens to an economy when you pump it with trillions of dollars and you bring the borrowing costs down to nothing. How quickly things can suddenly turn around.
Yeah, everyone wants to be a developer. I've met a few people that and I've said this before. I shook my head. I'm like, how did this person get this project to this point? I'm just shocked.
The biggest nightmares I've seen is when you have generational developers, like a very big company that's family run, as most of, shockingly, all the development companies are. They're generally families. And you see that next generation trying to do their first kind of cool infill on Queen Street or something like that. Like, you're just like, this is never going to get built. I'm sorry.
Well, the good thing about having the family connections is sometimes the daddy or the grandpa comes in and funds the equity for a project that it hasn't got the sales to get construction financing, and ultimately gets built. It gets built at a loss, and it's not the son that takes the loss. It's the multimillionaire grandfather. So I think those ones are all right. It's the people who did really well in finance or crypto, or they're a doctor and they put $500,000 in a down payment on a piece of property, and now that's completely wiped out, right? And they're like, oh shit, I thought this development game was easy. So those are the ones I worry more about than some of these rich families, and I'm friends with a lot of those sons out there, and a lot of them are doing really well, and they learn pretty well from their parents not to embarrass them. So
everybody has aspirations of being a developer, but once you realize how slim the margins are and all of the risk variables and timelines and how long they're extracted for, you really have to have pockets and experience and contacts with
development
the city
is extremely risky.
Oh my God.
The fact that we've delivered as many units as we have just kind of blows my mind, because I talk to a lot of people at every part of the industry, and just how many roadblocks are put in front of you every single day.
Oh my gosh.
A developer has to have such a unique skill set in terms of their ability to negotiate and not below their top. You just can't start yelling at these politicians and losing their mind, right? You really have to have a certain way of going about it to get your approvals, and a certain way of going about it to get your financing, and a certain way of going about it to negotiate with trades and contractors and city officials. I mean, it's a meandering path, and I'm just shocked at the skill level that you have to be able to navigate all these time bombs that are put in front of you.
And the patience, my gosh.
Oh my goodness.
That is something I don't have the 7-year time window patience required for something like that. Sure.
No, I mean, in a lot of cases, it's a lot longer than that, right? Certainly on the low-rise side, it might be you're talking 15, 20-year timelines for some of these properties that they're buying. I mean, it's crazy.
And speaking of developers, you're in a lot of closed-door conversations with all levels in the city. How would you define the sentiment, knowing we're in such a low-level transaction standpoint, from land to sales and to soon-to-be deliveries? Like, what are the conversations like? What is the mood like, comparative? Because you've seen it all, right? You would have seen it in 2022 or 2021 and 2016. Like, how is the shift playing out, and what's it like?
Yeah, I mean, obviously, March of 2020, March, April, May of 2020 during COVID, that was a whole different mindset, right? That was what's happening in the world. Are we all going to die? Right? That was a very different mindset than it is today. But this is the worst sentiment in my career in terms of people's outlook on the marketplace. Even worse than Q1 of 2009 in the kind of the worst of the global financial crisis. They just, most people see that the timeline is very, very long before we get investors back in. And I'm sure if someone's watching this video and they've made it this far in this video, they're a little bit more familiar with how the investment market works. Investors bought pre-construction condominiums because they were going up in value. They weren't buying them for cash flow in the first 2 or 3 years, right? No. We were getting to a point where maybe you weren't even going to be cash flow for 7 or 8 years, right? That's a long time, right? When you're talking about putting 20% down. And the market does not exist without investors. And I've been saying this till I'm blue in the face. And you'll get the advertisements and the op-eds by academics and affordable housing advocates and goody two shoes politicians that say people that invest in real estate are bad. People should own more than 2 units. This is terrible. But someone that builds a housing is an investor. Someone that buys the housing and pre-construction, they're an investor, right? Like the pre-construction investor is simply crowdfunding the equity of the development, essentially, right? Most of them will sell the unit within the first 5 to 7 years after completion. So it becomes an end user unit eventually. Most investors are not holding units for 20 years or 30 years. Some of them are, and that's fine, right? Someone might own a rental building with 400 units. Some condo investor may own 400 units, right? I don't see why it is such an issue in the marketplace, but we need these investors. So therefore we need appreciation in the marketplace. There's just not a pathway that I see that we can get prices to a point where you can buy in pre-construction and they can cash flow at completion. There's no pathway to get there in terms of the marketplace. So we need appreciation in the marketplace. So either that or we need to get costs way down, and there's not a big pathway to that either. I mean, the government can lower their fees in terms of HST, land transfer taxes, development charges, building permit fees, community benefit charges, et cetera, et cetera, et cetera. There's always a few I forget in terms of all the taxes on a new project. But land values aren't going to go down dramatically unless we open up every property in the GTA to high density, and we know that's not going to be economically feasible. We just see the pushback of allowing 4-unit buildings on every property. How people lose their mind, and these are family neighborhoods. How dare you let tenants in here or people living in 1,000 square feet? So we're obviously not going to see a huge decrease in land value, and land value in a high density side is only 10% of the pro forma
input.
Are costs going to come down? Are we going to pay people less? Is the cost of steel going down? Well,
no, not really.
I think the cost of steel is going way up. Yeah. Right, with these tariffs and everything else. So
maybe new carbon taxes. Apparently, we don't need steel.
Yeah. So yeah, I just think the market as we know it has changed fundamentally. I think we're going to deliver a lot less supply than we're used to getting, and that means that less people can move here, and more people are going to leave here, unfortunately, and that sucks because I love Toronto. I love what the amount of new condos has allowed people to live in such a great city. If people listen to my podcast, they know I've mentioned this many times. There's only a couple great cities in Canada, to be brutally honest, right? Montreal does have a language barrier, right? There's something that and politically doesn't sit well with some people, so that might be a good option for you. Vancouver is more expensive than Toronto, right? So you're not going out there for affordability. Edmonton, Calgary, good cities, but let's be honest, they're not world-class cities like Toronto. And then in Ontario, I'm from Guelph. I'm familiar with Kitchener-Waterloo, nice place, but it's not Toronto. Ottawa's not Toronto. Kingston's not Toronto. London's not Toronto. So the ability to move to an up-and-coming, like a Nashville, to move to a San Antonio,
Yeah,
to
we
move
don't
to,
have that.
we just don't have those
Yeah,
types of cities that with tech hubs and super cheap housing and lots of opportunities. We just don't have those to the same extent. So we
yeah.
need to be building housing here in the GTA to accommodate those people. And if we're not doing that, we're going to have a really detrimental impact on the average person's life.
Awesome. So I want to switch gears a bit. I get your newsletter. And one of the things that caught my eye in your Q4 newsletter was you wrote about a shift in development trends and you identified several of them. But I thought it was really interesting where you're talking about developers has shifted focus to smaller end user projects and rental developments that align with current market dynamics, favoring livable unit layouts and rather than over commoditized micro apartments. Tell me about that.
I've always said that investors are ultimately reacting to what's happening in the marketplace, right? So they see that affordability is getting worse. So they want to buy small suites because they are easier to rent and they're easier to resell. But ultimately, they want to put less down, right? They want to invest. The thesis a lot of times is they're investing in real estate without a mortgage, right? So you're putting the money down, you're betting on the value of that condo at completion. But as the cost, that toxic soup that I talked about, right? Development charges going up 20, 30%, costs going up, trade profits going up. It really shot up the price per square foot that was needed to make these projects work financially for the developers. Therefore, to get a profit, they shrunk units even more, right? So we started to get some pretty ugly looking floor plates, right? And buildings with average unit sizes of 515 square feet, one bedroom units of 435 square feet. So they work for a certain amount of certain people. I hate it when some of these morons out there call them dog cages and all these
Oh,
other things.
yeah,
And it's like, okay, Richie Rich, yeah, you didn't have to live in
yeah,
something like that, but some people do. Some people can only afford
yeah. Okay,
435 square
more
feet.
like okay, boomer.
Yeah, exactly. Right. Like some
Right?
people can only afford
Yeah.
that. And guess what? My office is 365 square feet. I got a pull out couch. I could, when ultimately my wife kicks me out, I will do all
Plan
right,
B.
and
Plan
this,
B.
I'll be living in this space for a little while, right? So it's fine for a short period of time. Yeah, maybe you don't want to live in this size for 15 years, but it serves a purpose in the marketplace.
Yeah.
So
You know it's interesting.
getting off track.
No,
But
but
we
this whole dog crate thing kind of drives me a little crazy, and I'm sure we'll get some comments on this. But like our office is in Little Italy, and right across is a small building that I actually lived in years and years and years ago. And I had this, and I can see it from my office today, which is hilarious. But I had a little 500 square foot condo, but it was a corner condo. It had super high ceilings. It had a beautiful balcony. It had great views, and it was just a one bedroom. And I think fondly of my time in that space and what a great, brightly lit, well designed space
Yeah.
that was. And if circumstances changed in my life, like I have such fond memories, I could live in a space like that. Maybe we'll have to talk to Corey about that offline, but no problem. And so, a well designed space is so much more important than the square footage.
Yeah. Yeah.
And I think this whole dog crate thing just gets so blown out of proportion by certain demographics, and it's really not fair. Like you get out of school and you've got a massive student debt and you're making $80,000 a year, like that's your reality.
Yeah.
So unless you want to move to Guelph, which nothing wrong with Guelph, but it's just something that people just say so haphazardly that really isn't realistic if you want to live in a city like
Yeah.
Toronto or Vancouver.
And I've said, no one's putting a gun to these people's heads, right? They're choosing to live there,
Yeah.
right? They're making a choice financially. When I was young, guess how many? I didn't spend a lot of time in my unit, right?
No.
I'm out playing basketball. I'm out at the gym. I'm, going on dates. Shocking, me? Yeah, I had a
Yeah.
few dates.
That is shocking.
you
but
know,
okay. I'll take your word for it.
going to the bar, more likely.
Yeah.
That was probably the thing. But I just wasn't spending a lot of time,
No.
I lived in a basement apartment. What I should have lived in is a 275 square foot condo that had a gym, that had a pool, that had a video game room, that had a bowling alley, that would have been a much better choice for me at that point in time, instead of saying, oh yeah, I need 550 square feet, right? And okay, I'll take it in the basement apartment, right? Like I should have sacrificed size for more location and amenities
Amenities.
within the building. So I hate when
Yeah.
other people tell people how they should live, right? They want to ban condo units where the bedroom doesn't have a window. And I'm like, there's only so much space in a unit. So some
Yeah.
person may say, I want my bedroom to be completely dark. I sleep there. I want the living area of my unit to be much larger because that's where I spend all my time. And guess what? That's their choice. If those units didn't sell well, then developers wouldn't program them, right? But they do. They do sell well because they have an audience of people that like them, that say, I'm fine with not having a window in my bedroom. That works for me, right? Like I sleep there. Maybe I work at night. Maybe I'm a night nurse. Maybe I'm a shift worker. This is perfect for me. But some people, they just have in their mind, I like something, and therefore everyone should like it, and therefore we should program the market the way that I like it. So,
Yeah.
anyways, that drives me nuts.
And the last thing I'll say about that is go to Manhattan, go to Paris, go to Tokyo, like see how people in those cities and how much space the average person has when they live in those cities just to be in those cities. And
Yeah.
it's no different here.
Yeah.
But I did think that was an interesting segue, and I found both of us actually being somewhat passionate about that topic, or annoyed, one of the two.
Yeah, both.
Um,
But I
yeah,
was
but
just to finish the one point on where the market's going. So
yeah,
yeah, developers are ultimately have to shift. If you can't sell units to investors and you have to sell them to end users, well, yeah, you can't sell 600 unit buildings. You can't sell 500 unit buildings. You probably can't sell 400 or 300 square foot, 300 unit buildings. You probably need to get 150. Maybe that's probably the maximum that you could probably sell without a high concentration of investors. And some of the investors are not, we need to make a lot of money on this. Some of the investors are, I'm buying this because my kid is 12 and I'm going to rent it
yeah,
out for 3 years. And then when they go to university and at Ryerson or York or something like that, they can live in it then. Or if not, then I'll just resell it at that time. And yeah, maybe I'll break even, but I'm giving my kid a chance. So that's one of the investor groups that
yeah.
doesn't get talked
We've
about a
seen it.
lot. So I think the buildings are going to be smaller, and now developers, because of some of the incentives that the government has offered, is now investigating rental. So GST has been taken off. There's different funding models through CMHC for lower financing. So people are looking at those different programs, but it's still difficult to make the numbers work. Unfortunately, I'm sure some of your listeners know, but maybe they don't. But on a condo project, part of the capital stack for financing is purchaser deposits. You can borrow against purchaser deposits. There is, for the lender, revenue certainty. For the most part, 70, 80, 100% of the units have been sold at a certain price level. Therefore, we have people contractually obligated to pay that price at the time of closing. And the rental, you might feel confident. You might underwrite that deal at today's rent level, but that doesn't guarantee you anything. In
No.
3 years' time, that rent could be 20% higher or 20% lower. And in the case of COVID, it was probably 25% lower than some of those developers had anticipated. So maybe that's a once in a lifetime occurrence, but it happened. There's precedence. It happened. So that's why lenders are a little bit more cautious, and they're requiring developers to put in pretty big equity checks. So if you have to put in this big money up front and it's not borrowed against purchaser deposits, it's your own money, then yeah, you're not going to build a 939 unit, 75-story rental building because of the upfront cost, but also because of the lease up, right? It takes a long time to lease 930 units. I was recently doing some work in the Mississauga city center area, and I think M City 1 did 465 leases in 1 year. So that's pretty impressive for a building, but those are all individual condos. And once an investor has got that person signed up, they don't care as much about the process of them moving into the building, right?
No.
You got to wait 2 hours for the elevator.
That's it.
sorry, right?
Yeah.
Like I got your first and last month's rent, right?
That's it.
But when you're a purpose-built rental operator, you want that to be a smooth transition. You want
Of
that
course.
people to spread the word that this is a great building to move in and it was a fantastic process. So maybe it's not quite as easy to move in 465 people in a single year into a building.
It's interesting talking about purpose built because we're seeing a lot of the existing purpose built buildings that have been recently completed really, really struggling. And, when you're planning or doing a pro forma, as they would have done 4 or 5 years out to get the completion done today, you would have penciled a lot higher rental numbers than where the market is at. And so there's a premium if you want to live in a purpose built rental building, usually because they have more amenities and professional services and guaranteed that you're not going to be forced out when your landlord wants to move their kids in or they want to put it on the market for sale. So there's lots of advantages to living. And there's some beautiful purpose built rental buildings. But in this time of economic downturn and uncertainty and a sluggish rental market to begin with, we're seeing a lot of these buildings really, really struggle. What are you seeing on that side? I know you probably get involved a lot earlier than this, but what context could you give based on the
Yeah, I mean, I
conversations you're
follow the
having?
lease ups and they've been pretty good, right? I wouldn't say they're
Yeah,
great. I think the buildings in the suburbs have done a lot better, right? If you look at some of the lease ups of that Starlight has been able to get at some of their projects downtown, obviously there's just a lot more competition, right? And the
yeah,
competition for from condominiums and for the type of people that are renting those units. So if you're like I said, the people that we're talking about, maybe 22 to 27, you're not really set in your job. And so, yeah, if you get kicked out of your unit because the investor is selling it, that's not the end of the world. You don't have a lot of possessions.
yeah.
You don't
All
need to
good.
hire two
Yeah,
men in a truck
no,
for
just your
to move
buddies.
all your stuff,
Yeah,
right? So you're more inclined to rent a condominium versus say someone that's retiring and selling their house. They want security of tenure. They
yeah,
want on-site professional
yeah,
management. They want that to be a smooth move-in process. They want to pick up the phone and call the landlord and have that person there within 2 hours to fix their sink or their shower. That's what they
yeah,
want. But
yeah.
in a condo, yeah, you know what? These young people, they'll pull out a YouTube video and try to figure it out, right? Like I'll fix it myself. So it's just a different tenant. So I think some of the downtown projects that have come online are having a little bit more trouble, but some of the suburban projects are doing all right. But in the grand scheme of things, they're coming out with some incentives. 2 months free rent, $500 gift cards, some things that are kind of moving the needle for people, and so we'll see. We'll see if those people stick, right? If they come in and start just moving from purpose-built rental to purpose-built rental to get
Yeah.
some of those incentives. We'll see. We'll see if
Interesting.
they take that route.
And are you seeing, or what type of conversations are you having with your typical condo developer looking to get into purpose built or getting involved with purpose built, or maybe shifting entirely to purpose built? Definitely seems to be a lot of your traditional condo builders in the city are getting involved with purpose built. But like, how big of a shift is this? And do you see this as being something more longer term, or is this a short term reaction to what's happening right now in the market?
Yeah, no, I think it's going to be more of a long-term trend, right? Like I said, I do expect the pre-construction condo investor to come back when pricing starts to come back. I just don't think it's going to be the same extent. I don't think we're going
No.
to get 25, 30,000 sales a year. I think it's going to be significantly lower than that. But I do think there is a lot of pensions and patient capital that wants to own more rental in the GTA. I think they see that we are going to be perpetually undersupplied. If we're not going to have 35,000 or 30,000 pre-construction units and we still need 30,000 units a year, those units are not going to be provided to the same extent through the rental market. So we're going to be seeing rent growth continuously in the future, and that's a good investment for a pension fund that or an insurance company or someone that has a long-term outlook on our marketplace. So developers are looking to make those contacts on the financing side. They're trying to understand what's the best building in terms of how fast it can lease up, but also having the staying power, right? They want to offer a wide range of offerings, and so the building is resilient to changes in the marketplace. And so yeah, it's a different mix. They're definitely larger units on average. Some of these new condo buildings, like I mentioned, were 550, 560 square feet. Some of the downtown projects, but a lot of the rental buildings are 740, 770 average unit sizes. So definitely bigger average units. There obviously is still demand for very small units, like we talked about, but the rental guys are a little more reluctant to do them because they do turn over faster. Once you have turnover, it's a higher, you have to release it. So there's a cost of that. You have to clean the unit. That's a cost, right? And then the more small units you have, then they cost more money, right? More walls, more kitchens, more bathrooms, more front doors. So it's a long-term versus short-term pain, right? You may be able to lease up the building faster if there's smaller, more affordable units, but it costs you more, ultimately more turnover. So it's definitely a weighing game, and I'm trying to analyze the market data and see what it says. Some markets, the plus dens rent really, really well and actually get a higher per square foot. But then other markets, the plus den units get a much lower rent per square foot than you would think, given, if I plot them all on a scatter plot and put a linear trend line through it on a per square foot basis, then they should be on that line somewhere, but they're falling way below. So it's always pretty difficult, right? I think just doing ones and twos in a lot of markets is really all you need. Whereas some, maybe it's best to do all five of the key bedroom types: studios, ones, 1+10s, 2+10s,
in Toronto proper, are you seeing more of that mix going towards larger units for future projects on purpose built?
I'm seeing a little bit more of it. Yeah,
Okay.
I think so. I think for some greater context, we had Christopher Wine on my podcast from Equiton, and they own a lot of rental apartments, but they're also looking to get into building more rental apartments as well. And he talked about that there's much more demand for the professional renter now, right? That people say, people have just always been told you have to buy real estate. It goes up in value. It's great. And some people are saying, you know what? I'd rather use my capital somewhere else, right? I'd rather use that capital to invest. I'd rather use it to travel. I'd rather use it for my business. But I want a high quality, purpose-built rental. I don't want to lease a unit from an investor. I want it from
certainty, amenities,
TWL. I want it from Starlight. I want it from BGO, right? Like I want a high quality from a Tricon or Fristrovia. I want it from someone like that. And I'm willing, and I want 1,200 square feet. I want 1,500 square feet. I can pay $5,000. I can pay $6,000 a month, for a lot of people. That's, it's a crazy to think about that, but there's units leasing for $6,000, $7,000, $8,000 a month, and people are happy to pay it. So I think we're going to get a little bit more of the professional, affluent renter in our marketplace. Baby boomers, we've had so much talk about them moving down and them buying condos, but that just didn't happen, right? They didn't want to live in 700 unit buildings where 350 of the units are to kind of rowdy tenants that are in their 20s, right?
With the fire alarm going off at 2 in the morning on a Saturday night.
They don't want to live in Maple Leaf Square, right? So, but I think in 15, 20-story building in the annex with a larger average unit size, I think that's the type of building that they'd want to move in, and we've seen that in some of the projects that have come online in those marketplaces. So it's always interesting. It's always interesting to try to predict the future in terms of where the demographics are going. And I did a little video. I have a Patreon page where I post some different videos, and I was talking about a podcast that I had listened to recently, and it was talking about how 60% of university students are now female, and in many universities it's significantly higher than that. And so more women are getting educated. More women are being the primary breadwinner, and so they're having less children, and so ultimately, if we're not having as many kids in this country, but we still want GDP to grow, we need to bring in immigration. But if we don't bring in immigration, well, what kind of impact will that ultimately have on on our housing market? What impact will that have on the size of units that we need to build if there's a lot less families in our marketplace and in our cities?
Mhm.
So, anyways, there's always shifting demographics and shifting social impacts that will ultimately have an outsized impact on our real estate market. So, anyways,
It's interesting. One of the things I've never really thought about until this conversation was or is if you have a lot of condo developers understandably moving into purpose-built rental, and we're going to see a glut of inventory coming online for a significant period of time from 2028 to, let's say, 2033 or whatever that time period is. And then what's coming online is going to be larger units. There could be a demand for these smaller guys, which are really, really struggling right now because there's just nothing coming online that suits that need, while you have a demographic group which is continuing to grow that's going to be looking for some of those smaller spaces because not everyone can afford $5,000-$6,000 a month rent.
yeah. There's always switches, and everything
Interesting.
moves one way, right? We start to get some bigger units, and then okay, well, the prices go up for the smaller units, so then we start to see more
Yeah,
small units. The
it's a
the problem,
pendulum.
yeah, yeah, exactly. And the problem with the new condo market, like you said, like those it's a long period of time between someone's programming a building. I'm helping people program buildings now, but I'm reacting to today's data, right? In helping to program them. I'm trying to think long term, and trying to think, okay, I'm not just saying, oh, all the one bedrooms are leasing up the fastest at the highest, rent per square foot. Therefore, program the entire building as one bedrooms, right? We're not doing that. I'm thinking, okay, what's a balanced building for now and into the future? But ultimately, 5 years from now, when I'm doing that same process for a developer, quote unquote, hopefully I'm still in business 5 years from now.
Well, I think you will be. I think you're
It's
good.
going to be a different way of viewing things,
I
right?
think so.
And I'll be relying more on like ChatGPT and Gemini and Grok and all the others to assist me in that process.
Amazing, amazing, amazing. Okay, so there's two more things I want to talk to you about. One of them is policy. I'm not sure if you're aware, but there's an election coming up in Canada. Theoretically, maybe, hopefully, or not,
Yeah.
but there's a belief that there's one happening sometime soon. Um, from a policy perspective, do you see any levers a government could pull to help deal with the situation of chronic inaffordability, regardless of where interest rates are at? We seem to be continually struggling. And as per this conversation, that struggle will continue. Are there things that you think of creatively, maybe even outside the box, that a government could do that would help stimulate things
Yeah,
or
I
help
think
bring
it's
affordability down and increase
Yeah, I
supply?
mean, I think it's difficult on the federal level to
Yeah,
impact local real estate markets. I think their biggest impact is how much immigration gets brought in, right? I think that's the biggest
yeah,
impact that the federal government can have on housing values. I mean, they've announced so many different programs, so many that they're going to give money to the provinces for this and that. And ultimately, we just don't see a lot of affordable housing buildings get built. I fundamentally believe that the government should be building more
yeah.
than they are. I don't think that's at the expense of market developers. I think we should both try to build as much as possible. I think of how much the government spends on healthcare and on mental health, on drug recovery, on homeless shelters, on and all that stuff that's related to people not being able to get housing or not getting a suitable housing, or just even think of, this is a terrible thing to think about, but just to think about people stuck in bad marriages that they're staying in because it's more affordable for them to live in this house together.
Yeah.
Right. And if you don't think
Yeah.
that's happening, it's definitely happening because I've
Oh,
heard
yeah,
it
it
from
is.
my own friends.
Yeah. No, it's
That
true.
said the exact same thing, that they just they couldn't afford to have two different places and they didn't want to live in two apartments. So they just stuck out living in a hapless marriage because they wanted to live in the house together, right?
Yeah.
So if we made the commitment from the government level to deliver housing, and so people could pay less than the market rate, then we'd be in a much better spot. We'd spend that money elsewhere, and maybe that those people would be able to buy more things, stimulate the government. We'd get more tax dollars, and maybe we'd make up for it. Maybe China's not the best example, but I mean, they go out and build massive amounts of housing, and these people are getting charged $200 a month in rent. So maybe the economy can only afford to give them a $25,000 salary, but if you only pay $100, $150 a month in rent, then $25,000 a year, you could survive. Right?
Yeah, but you don't have Instagram. Trade-offs, man. Trade-offs.
I love to to count on the government to do things to change, but I'm almost tired of having these conversations about lowering the government fees and how it's 30% here, but in a lot of American markets, the government fees and taxes on a new development might be 5 to 7%, right? Like, it's crazy that's 32 here. I mean, that's huge. I mean, we need to liberalize planning, but again, we have a lot of proof now in the GTA, but we can't sell it. So so we need to do something that's going to lower the costs, significantly lower the costs. And I don't know. I hope that there's some innovation in construction. I think that would be very helpful. But once you move into high density development in a city, it's a much more expensive way of building housing, more expensive land, more expensive construction, more expensive financing, longer timelines. So everything's just more expensive, and that ultimately has a real negative impact on housing. Because people always say to me, "Why is it so much cheaper in Dallas-Fort Worth?" I'm like, it's sprawl, it's wood frame construction, no basement, less insulation, illegal immigrant workers, right? There's and the municipalities are like, "You're going to build that? Good luck." Right? Stamp. There you go. There's your entitlement process, So,
and here's your gun.
Yeah, here's your gun if someone tries to steal your shit, right?
Yeah, exactly.
So it's just a different way of doing business. So I'd love to see the how about the federal government just start some new cities? That's what I want to see, that just on a piece of land that they own, a base for the military, just start a new city. Just on the periphery of that, just start building high-rise buildings and hire people in the military and encourage people that work from home to come and move to these communities. That's the kind of fun idea I'd like to see started.
Sure, and we could get the people who built the LRT in all of their experience, and then we can bring them over there, and then we could just have a project with no budget and no timeline.
Yeah, that's the scariest part, right? But in the end, if we hire everything local, everything's done local, then it might be over budget, but you're paying another Canadian. So it's coming around the bend somewhere, right?
Giant stimulus package.
Yeah, exactly.
And the last thing, everyone's always yelling at us, how come you're not talking more about tariffs and what's happening right now? I know specifically, when it comes to development, we're thinking long-term down the road. And I guess this is just going to play itself out over time. And just right now, as we started out saying, it's really uncertain. But how would you be a developer right now and build out a pro forma? Or how would you look at the next few months, just, having a background in economy and being an analyst? Like, what is your take on all of this from both how developers are dealing with this, and then at a high level, how are you seeing all of this?
Yeah, I mean, so strange. I mean, I have a major hate on for Donald Trump. I have since I actually liked The Apprentice. I thought that was a fun show.
Yeah.
And then I went and pulled out a couple books on him from the library. Yeah. And there was one that was written by a former employee of his. And I just immediately hated him. All the things that he did, just one of his right-hand men died in a helicopter crash, and he didn't go to the funeral because he just didn't like being around people that were crying. And I was just like, there was just so many stories like that. And then when he started running for president, I was just like, oh my God, there's no way this guy can win. There's no way someone that acts like this, that is this type of person, can become president. But here I am
Twice.
completely wrong.
Yeah.
The tribes that take place now is kind of crazy. It doesn't matter what's wrong with someone's personal
Yeah.
life. I mean,
No.
you just think of someone that cheats on their wife with a porn star. That used to be disqualifying
No.
or being a politician.
Yeah.
Now it's like a gold star or something, right? So, anyways, to think of that person now making foreign policy decisions, and I heard an interesting podcast where someone was saying that Donald Trump almost thinks of himself as a mob boss, as his own Don, the
Yeah.
Don.
Yeah.
He's providing protection to NATO, right? Like he's the guy that provides the protection. So Canada, you need to pay up. Mexico, you need to pay up. Europe, you need to pay up.
Yeah.
But he respects the other mob bosses, the Putins and the other dictators in the world. He respects them. They're doing what it needs to get the money from their underlings. And if you don't, if you're not doing what we want, then we'll
respect.
just, Ukraine, you're not doing what we want. We'll just take your property. So it was an interesting analogy that was said there. So essentially, he's using tariffs as a negotiating ploy. I don't think it's about fentanyl. I don't really think that. He was just trying to come up with something that's going to play well with his base. He just wants to negotiate. He wants to be able to have the power over companies, right? The companies say, well, like, can you take the tariffs off my business, right? Like I'm automotive, I'm steel, I'm this, I'm my agriculture. Okay, well, yeah, well, if you donate to my cause. My cause and the Republican Party, then maybe we'll talk about it. So I think it's just a negotiating ploy for him. But as a local developer, like how could you possibly plan? Because he's changing his mind every 24 hours.
I have no idea. I have no idea what's on.
I don't know which tariffs are on right now or which are not. Like how could you possibly, unless you're a political person that follows every single move, the Steve Bannon thing of that he talks about, the flooding of the zone, that Trump's just doing something different every single day, and you can't keep track of everything that's going on. So it's very difficult, I think, for any business owner to do long-term planning when you can't control for your costs. I know that,
or plan for your revenues, because everything seems to be freezing up.
Because there's the people don't want to buy right now because they're just worried about what's going to happen to the Canadian economy and how do I realistic doing a pro forma is so difficult already, and now not knowing if things are going to be
idea
25% more or less, and even what doesn't get talked about is someone puts a tariff on something, so now it's 25% more for that American company to purchase it. But then the domestic company looks and says, okay, well, that's 25% more. So I'm just going to raise my cost by 20%. Right. And then it's still 5% cheaper than that person buying over there. So they're still going to buy from me because it's less, or, if they don't buy, then obviously they'll bring it down, but it's still very inflationary, even on the domestic companies. So
for sure,
even for a Canadian developer, if they want to source it locally, they may still find that it's 15-20% more because that company's now trying to take advantage of this new policy. So again, not easy. There's second, third, fourth order impacts to these things, and people often ignore those things. As an economist, you always have to pay attention to the second, third, and fourth order impacts of any policy change, and it's often not things that you would expect. So
for sure,
and so it's not a fun time in our industry to try to figure things out. I'm lucky that people are still coming to me to try to figure things out, and there's people that still want to build. There, as much as developers get a hard time for what they cost, a lot of people in this industry are still very proud about delivering housing and providing a house for someone. And it's just very rewarding for them to see someone move into their first apartment, or to see a family move into their first single family home, or just have that retiree just have a fantastic experience selling their house. They were very scared to do that and move down, and now they're in a condominium and they love it, and they love having access to the city, and they're walking more, and they're meeting new people instead of being isolated in a single family community where all the kids have moved out. So there's some rewarding experiences for these developers, and not just about making money, but it's a risky business. developers can't, you can count on one hand how many developers can finance their own projects. They have to get financing, and the project has to have a certain return before they get that financing. So it's not about being greedy. It's about meeting the requirements of the lenders, and a lot of those requirements are even more stringent than they have been in the past.
Okay, well, there you have it, Ben. So great to have you for a second time. I enjoyed this conversation so much. It's such an uncertain, interesting period right now. I'm sure in a few years' time, we'll look back at this conversation, kind of like the way we look back at some of our COVID conversations, and just be like, wow, the world was a much different place then. Yeah. So I think our next conversation will be on a little more stable ground and maybe a little more positivity. But the good thing is in uncertain times, there's always a flight to quality, and people are always going to be looking for really good advice from people like yourself. So I'm glad to see you're still doing well, and I look forward to our next conversation. Thank you so much for tuning in. Ben, where can people find you?
Yeah, so I'm on LinkedIn, Ben Myers, Bullpen Research and Consulting. I still play around with X at Ben Myers 29 at Bullpen Consult. I've started a Patreon page, which requires a sign-in. So I'm just posting some different videos on there, some different things from my podcast, Toronto Under Construction Podcast. So patreon.com/Tuck Podcast, TUC podcast. So it's just playing around with some different formats and seeing what grabs people's attention. So I'd love to have you over there.
Awesome. Well, thank you, everybody, for tuning in. If you've made it to the end of this conversation, I hope you've enjoyed it and found it as interesting as I have. Please be sure to hit that like or subscribe button, and any comments, as long as they're constructive, down below. We'd absolutely love to hear what your thoughts on this conversation are, and if you have any projections where you think the market will be in 5 years' time based on some of what we discussed today. So thanks again for tuning in. Ben, so great to have you here.
Thanks for having me.